Welcome back, everybody. Today, we're going to be diving into futures trading, 50 Rules for Success.
Okay.
And this book is really fascinating. It's kind of like a cheat sheet almost
Yeah.
of advice gathered from over 1,000 experienced futures brokers.
Wow.
So we're talking about a lot of wisdom packed into this
That's
book.
a lot of experience.
Yeah, so whether you've been trading futures for years or you're just starting out,
Right.
I think we're going to unearth some golden nuggets here to help you navigate this market.
For sure. One of the things that I found fascinating is that right out of the gate,
Yeah.
the book really emphasizes this idea of following trends, which can be kind of counterintuitive,
It is.
especially for people who really want to kind of chart their own course and,
Right.
be independent.
Yeah, it definitely goes against the grain of what we hear about being an independent thinker or,
Right.
going against the crowd.
Absolutely.
But why exactly is following the trend so crucial in the world of futures trading?
Well, think of it like surfing. You wouldn't paddle directly against a massive wave, would you?
No.
Futures markets have the similar kind of momentum.
Mm-hmm.
And, fighting it can be exhausting, often futile.
Right.
And the book uses this really clever analogy, I think. It compares it to being a sheep.
Okay.
Sometimes the crowd's collective wisdom
Yeah.
is pointing you in the right direction.
So it's not always about being the contrarian. Sometimes riding that wave of popular sentiment, even if it feels a bit sheepish,
Yeah,
is actually the more strategic approach.
exactly. And the book argues that, recognizing this power of trends is fundamental to success.
Okay.
Now, that doesn't mean you blindly follow the herd.
Right.
It's about understanding what are the underlying forces that are driving those trends
Right.
and then aligning your trading strategy accordingly.
Now, before we even think about analyzing trends or developing strategies,
Yeah.
the book stresses something even more foundational, self-awareness.
This is where it gets really insightful. It prompts us to ask, why am I even in this market? Is it for the adrenaline rush?
Yeah.
The allure of striking it rich quickly?
Right.
Or are you in it to build like a long-term investment strategy?
It's easy to get caught up in the excitement and just jump in without thinking, but taking that step back and understanding your motivations feels crucial,
Totally.
especially for somebody like me who is a bit impulsive.
Absolutely. And your motivations will shape your risk tolerance, your trading style,
Right.
and ultimately your chances of success. The book really argues that aligning your approach with your goals is key to avoiding those emotional pitfalls that
Right.
can lead to bad decisions.
Speaking of avoiding pitfalls, the book introduces what it calls the holy trinity of successful trading system, money management and discipline.
This is where the rubber meets the road.
Yeah.
You need a system, whether it's simple or complex, to help guide your trading decisions.
Okay.
It removes emotion from the equation. It provides a framework for evaluating opportunities.
So it's not just about gut feelings or hunches.
While intuition plays a role, I think relying solely on it can be dangerous, especially in the fast-paced world of futures.
Right.
That's where that second element of the Trinity comes in money management.
Yeah, and this is probably one of the hardest things to master, I think, for a lot of people.
It is.
Figuring out how much risk you're comfortable taking.
Exactly. And money management is all about protecting your capital. It involves setting stop-loss orders, determining position sizes, having a clear understanding of your risk tolerance.
Yeah.
And the book really emphasizes that this is not a one-size-fits-all approach.
Okay.
It's about tailoring your money management strategy to your own individual goals and your financial situation.
Okay, that makes sense.
Yeah,
You need to have a plan in place before you even think about placing a trade.
absolutely.
But then there's that third element, discipline. And that's where I know I struggle.
Yeah.
Sticking to the plan when the market gets wild or.
Oh, it's so tough.
Yeah.
Discipline is often the most challenging aspect because it's so deeply intertwined with our psychology, The book dives into this whole emotional roller coaster of trading and highlights common traps like the sunk cost fallacy, where we cling to losing positions simply because we've already invested so much.
It's like refusing to sell a stock that's plummeting
Yeah.
because you're convinced it's going to bounce back,
Right.
even though all signs point to the contrary.
Yes.
I've definitely been there.
We all have. And the book offers this counterintuitive but powerful advice.
Okay.
Embrace those small losses as part of the game.
It's a tough pill to swallow.
It feels
So much better to win,
It does.
even if it's just a small win.
Yeah.
But why is accepting losses so important in the long run?
Because holding on to those losing positions, hoping that they'll just magically turn around,
Right.
can decimate your account.
No.
Cutting your losses quickly allows you to preserve capital and stay in the game.
Right.
For those opportunities where you can really capitalize.
So it's about minimizing those emotional knee-jerk reactions and sticking to a predetermined exit strategy.
Precisely. The book suggests that if a position is moving against you after a few days, it's time to reevaluate. Maybe your initial assessment was wrong,
Okay.
or perhaps the market has shifted. The key is to be objective and detach yourself from the emotional weight of that trade.
So cut those losses short. But what about when things are going well?
Yeah.
The book also talks about the importance of letting profits run,
Right.
which I imagine is equally as difficult.
It absolutely is. We often have this urge to lock in profits quickly.
Right.
Even if it's a small gain.
Yeah.
It's a natural human tendency to want to win, even if it's just by little.
I could definitely relate to that.
Yeah.
But why is that mentality detrimental in futures trading?
Because sometimes the biggest profits come from riding those extended trends. The book warns against prematurely closing out winning positions out of fear or greed.
Okay.
Those emotions can lead to missed opportunities.
So how do we overcome that urge?
Yeah.
To snatch those small profits and run?
Well, the book's solution is, it sounds simple, but it's profound.
Okay.
A well-defined trading plan, having predetermined price objectives,
Right.
entry and exit points,
Uh-huh.
and a clear understanding of your risk tolerance really helps remove emotion from the equation.
Okay.
You're essentially operating on logic rather than impulse.
It's like having a set of rules to guide you even when the market throws those curveballs.
Exactly. It's about being systematic in your approach.
Right.
Which leads us to, I think, another key insight.
Okay.
Sometimes the best trade is no trade at all.
The art of patience. The book actually uses this phrase, standing aside is a position.
Right.
What exactly does that mean?
It means recognizing that not every market move presents a viable opportunity.
Okay.
Sometimes waiting for the right setup is more valuable than jumping in prematurely. It ties into this concept of opportunity cost. Every trade you take comes at the expense of other potential trades.
So rather than forcing trades, we should be patiently observing and waiting for those high probability setups.
Precisely. It's about being selective, strategic, not just constantly in motion.
Right.
And this is where I think another critical element comes in from the book.
Okay.
The broker-trader relationship.
Right. The book really emphasizes finding a broker who understands your individual needs and goals.
Yes.
It's more than just a transactional relationship, isn't it?
It's much more like a partnership. The book suggests finding a broker who acts as a coach.
Right.
Someone who helps you navigate the psychological challenges of trading, just as much as the technical ones.
I like that analogy. It reframes the whole dynamic. It's not just about placing trades. It's about having somebody there to help you stay disciplined. Absolutely.
And make sound decisions.
Exactly. The book suggests looking for a broker who understands your risk tolerance.
Okay.
And can steer you away from those impulsive trades that can just derail your progress.
And this ties into the book's broader emphasis on playing the long game.
Yeah.
So it's not just about chasing those quick wins.
It's about developing a sustainable approach to trading that can weather the inevitable market fluctuations. The book highlights the importance of surviving those early years of trading, which can be particularly challenging.
Right.
It's a marathon, not a sprint.
And one of the tools the book recommends for this long game is keeping a trading journal.
Absolutely. A trading journal can be so invaluable for self-reflection and improvement.
Okay.
It allows you to track your trades, analyze your successes and failures, identify patterns in your behavior.
So it's not just about noting the technical details of the trade, but also like the emotional and psychological factor
that influence your decisions.
Exactly. It turns trading into a learning experience rather than just a series of wins and losses.
Okay.
By reviewing your journal, you can start to recognize those recurring mistakes or emotional biases that might be sabotaging your performance.
I'm starting to see how a journal can be a powerful tool for self-awareness.
For sure.
But the book also delves into some interesting nuances of trading psychology, right?
It does. For instance, it highlights the common tendency to go long, meaning most people prefer owning something rather than owing something.
Yeah.
However, The book stresses that successful traders understand that markets can be traded from both sides,
Right.
both long and short.
So being adaptable.
Yeah.
And recognizing opportunities on both sides of the market is key.
Absolutely. It's about being flexible
Okay.
and adjusting your approach based on market conditions. And this leads to another valuable point the book raises. While computer trading systems and algorithms can be, powerful tools, they're not a substitute for understanding the fundamentals.
So it's not about blindly following a black box system.
Exactly. The book emphasizes the importance of having a solid foundation of knowledge, regardless of what tools you use.
Right.
This means understanding things like market dynamics, technical analysis, fundamental analysis.
It's about being an informed trader.
Yes.
Not just a button pusher.
Precisely. And speaking of being informed, the book cautions against trading on rumors or tips.
Oh, I've definitely fallen for that one before.
Oh, yeah.
We all want to believe we have some inside scoop that's going to give us an edge.
Right.
But why is this strategy so dangerous?
Because rumors are often unreliable.
Right.
The book advises waiting for the market's action to confirm any information before jumping in. It's about being disciplined and not letting your emotions drive your decisions.
So it's about waiting for concrete evidence, not hearsay.
Exactly. And this leads us to another important point.
Okay.
The danger of adding to a losing position.
That sounds like a recipe for disaster.
It can be. The book emphasizes accepting those small losses and moving on, rather than digging yourself into a deeper hole.
It's that classic gambler's mentality of chasing losses, trying to make back what you've already lost.
Precisely. The book's antidote to this is simple. Your first loss is your smallest loss. Cut it loose and live to trade another day.
Protect your capital and don't let emotions cloud your judgment. I like that.
Yeah.
But how do we shift our mindset to embrace this approach?
Right.
It feels so counterintuitive to accept defeat.
Well, the book frames it as a matter of survival. The traders who succeed in the long run are often the ones who manage to stay in the game long enough to capitalize on those big market moves.
It's about weathering the storms and being there when the opportunities arise.
Exactly. And to do that, the book recommends starting small, especially if you're new to trading. Trade conservatively for at least a year. Analyze your trades and learn from your mistakes.
So don't go all in right away.
It's about gradually building experience and honing your skills before you take on any significant risk.
The book also stresses the importance of keeping a trading journal.
Yes.
And not just to track your trades.
Right.
I'm curious, what else should we be recording in our journals?
The book suggests documenting your observations, your thought processes, even your emotional state during those trades. It's like a diary for your trading journey.
It's about turning self-awareness into actionable insights.
Precisely. And the book goes on to emphasize the importance of having sufficient capital to withstand those inevitable market fluctuations.
So make sure you have a financial cushion.
Right.
Not just enough to cover your trades, but also enough to absorb potential losses without derailing your overall financial well-being.
Exactly. Having that financial safety net allows you to ride out those temporary downturns without making rash decisions based on fear or desperation.
It gives you the staying power to participate in those big market swings that can lead to, significant profits.
Right.
But what about when those profits come unexpectedly?
Yeah.
The book talks about managing windfall profits. What exactly does that mean?
Windfall profits are those unexpected gains that come your way without, a clear reason or a plan.
So there are times when it's okay to deviate from the script if the market presents a golden opportunity.
Within reason, of course.
Right.
The key is to assess the situation carefully and make sure that taking those profits aligns with your overall trading goals. Now, this leads to another crucial piece of advice. Knowing when to step away from the market.
When is the right time to take a break?
It could be when you're on a losing streak. When you feel like your emotions are getting the better of you.
Right.
Or when you know your personal financial situation changes and what was once risk capital becomes essential capital.
Right.
The book stresses the importance of being honest with yourself. About your financial needs and adjusting your trading accordingly.
It's about separating your emotional attachment to trading from your real-world financial obligations.
Exactly. And finally, the book consistently emphasizes the importance of always using stop orders.
Seems like this is a recurring theme throughout the book.
It is, and for good reason. Stop orders are crucial for managing risk and protecting your capital.
They're like guardrails that prevent those small losses from turning into major setbacks.
Exactly. They're a non-negotiable tool for any trader who wants to stay in the game for the long haul.
It sounds like this book, Futures Trading, 50 Rules for Success, is all about combining a solid understanding of market dynamics with a keen awareness of our own psychology.
It is. It really is.
Yeah.
The book really emphasizes mastering both the technical and the mental aspects of trading. It reminds us that trading is a journey, not a destination.
Right.
It requires patience, discipline, and a willingness to learn from our mistakes.
And perhaps most importantly, it encourages us to be honest with ourselves about why we're in the market in the first place.
Absolutely.
What are we hoping to achieve? And are our actions actually aligned with those goals?
Totally. Trading should be approached with clarity and realistic expectations.
Right.
It's not a get-rich-quick scheme.
No.
But with the right mindset and a solid plan, it can be a very rewarding endeavor.
This deep dive has given me a lot to think about. I feel like I have a whole new perspective on futures trading.
That's great to hear. What stands out to you the most?
Honestly, the emphasis on self-awareness and discipline really resonated with me. It's easy to get caught up in the technical aspects of trading. Analyzing charts, identifying patterns. But this book highlights the importance of understanding our own biases and emotional triggers.
It's so crucial.
Yeah.
Our emotions can often be our worst enemy in the market.
Right.
Fear and greed can lead to impulsive decisions that just completely derail our progress.
Right.
That's why I think the book's focus on developing a trading plan, managing risk, and cultivating discipline is so valuable.
It's like building a solid foundation for success. And speaking of success, the book also reminds us that there's no one-size-fits-all approach to trading.
Right.
What works for one person might not work for another.
Exactly. Each trader needs to find a style and a strategy that aligns with their personality, risk tolerance, and financial goals. The key is to be adaptable, willing to learn and evolve as you gain experience.
This has been an incredibly insightful deep dive.
I agree.
But before we wrap up, I want to leave our listener with one final thought-provoking question. Based on the book's wisdom,
I'm all ears.
If you had to choose one area where you could improve your trading discipline, what would it be? Is it cutting your losses short? Letting your profits run? Or perhaps it's something else entirely?
Right.
Whatever it is, acknowledge it and make a commitment to work on it. Because as this book so eloquently reminds us, mastering the art of trading is an ongoing journey of self-discovery and refinement.
That's such a powerful question. It challenges us to take an honest look at our own trading habits and identify those areas for improvement. And ultimately, that's what leads to growth and success in the markets.
Exactly. So on that note, we'll leave you to ponder that question. Until next time, keep exploring, keep learning, and happy trading.
Sounds good.